Welcome back to another episode of Carolina's Closings. Today we're joined by Brayden Hawkins with North Carolina Farm Bureau. We're going to chat a little insurance today. Brayden has been full-time in the insurance business for over 4 years now. In that time, he's been able to help over 450 families with their insurance, including myself as well as my whole team. So personal testimony, the guy is great at what he does. The premiums are fantastic. So if you need any help with insurance, Brayden will be a great resource for you. He's also been a 4 times President's Club award winner since he started in the insurance. So he started fast. His commitment to helping families is top notch, and he's just a wonderful insurance professional. So Brayden, great to have you on today.
Good to be on. Thanks for having me. Excited to be here and excited to help some people out and give some information and obviously help you out on your podcast as well. So happy to be here. Thanks for having me on.
Great to have you. Let's tell your story. How'd you end up in insurance? For doing this for 4 years now, has it been your full career since you've been out of college? How'd you end up in the insurance world?
Yeah, so I before this, I was in sales for a window and door company. It was post COVID, rather when I got out of that. But ironically enough, played golf with the guy that recruited me in here. He was my old agency manager. He has since gone on to be our district sales manager now, effective January 1st. He kind of approached me and said, "Hey, I think you'd be great at what I do." And I said, "What do you do?" And he says, "Well, I'm an insurance agent for Farm Bureau." And I said, I don't even know how to spell Farm Bureau, much less insurance. So anyway, he kind of encouraged me and mentored me for the past 4 years. And he basically just said, go get licensed. I'll teach you everything you need to know. So it was nice to have that personal mentorship as well as a boss who, is behind you, motivating you, supporting you, challenging you, but also has your back as well, since he had some skin in the game in recruiting me. So it's been a blessing ever since, and love what I do. Love helping clients, and I get up with a smile and go to work every day. Some days are obviously better than others, but every day presents a new challenge, and no two persons alike. So obviously that's the fun part of it is getting to know my clients and helping them out with home, auto, life, and financial needs. So
awesome. Well, you come from real estate adjacent industries, right? With windows and doors and stuff like that. Any crossover that you've noticed in helping your insurance business with that background too?
Yeah, a little bit. Obviously, material of the house, dictates a little bit of this, a little bit of that. So just a couple bleed overs, but in the grand scheme of things, on the insurance side, we're looking at, a certain different angle, whereas, windows and doors, you're more or less working with a lot of home builders as well, but, a little bit of bleed over, but, it kind of ease the transition in, but, in a different light or a different glass, you're kind of looking at, two different sides of that. But, I wouldn't say the two are, relative, the same, but, there's definitely some bleed over. So, it kind of, with the sales experience as well, kind of, made the transition a little easier, if you will.
Cool. Well, let's get into insurance here, man. Let's tell me how you view homeowners insurance and why it is so important for clients to make sure they have insurance in place when they're purchasing a home.
Well, obviously, on your end, if there is a mortgage on the house, you're going to want to see an insurance policy on the house. Anybody that has a house that's paid off, I would never express to them to not have insurance. Obviously, it's the largest asset that you'll probably purchase several times over in a lifetime. But at the same time, the importance of that is just catastrophic, fire, wind and hail, certain claims, certain perils that can, present themselves that can create, huge losses that, could be devastating to the client itself. So it's nice to kind of, shed that or put that aside and say, hey, the insurance company has, this taken care of. Obviously, with a deductible in mind, you're kind of just spreading that risk back to the insurance company versus, taking the financial risk yourself for anything that may or may not happen.
Makes sense. I mean, we always like to say, hopefully you never have to use insurance, but you sure would be upset if you didn't have it, and you did, right?
Yeah, better. I say better to have it, not need it, than need it, not have it.
We're saying the same thing there. I like it.
Yep.
So you mentioned some things there: fire, wind, and hail. those are pretty common, right? On just your standard homeowners insurance policies that we see. What are some things that may not be covered in a traditional homeowners insurance policy that you recommend to clients as, hey, this is something we should be thinking about potentially adding to your insurance policy?
Yeah, uh, there are several things that a homeowner's insurance policy will cover that people don't understand or don't know that it covers. I had a client about 2 months ago get a lawnmower stolen, out of their shed. Since the lawnmower is pertinent to the upkeep of the property, obviously that lawnmower is covered under your personal property. So, subject to your deductible, we filed the claim. Obviously, there's a police report involved, but we covered that, to the value of the lawnmower. So, certain things like that people may or may not know. Another thing that people might think that homeowners insurance covers is just general maintenance. I've gotten some calls in my experience doing this where, the HVAC unit, doesn't work anymore and they want to file a claim. And it's like, well, if it's an old unit, obviously it's not something that we would ultimately cover. But, if the house caught fire and the HVAC unit was, part of that, damage or part of that claim, then yes, since it was a fire claim. But if it's a 25-year-old unit that just, stops running, obviously that wouldn't be covered. And your general maintenance as well, wear and tear on certain things, would not be covered on a homeowner's policy. Whereas, if it were caused by a fire or, what have you, obviously that would qualify for it to be covered. So just depending on what the peril is or the cause of loss, greatly dictates what is and what is not covered. But I think a lot of people misconstrue general maintenance to, homeowner's policy, whereas, sometimes your house is a new build and the builder offers a warranty. That's completely different than what the homeowner's policy would cover if the house were struck by lightning or if wind blew a tree over onto it and caused damage that way. So.
Cool. Cool. I think insurance is maybe not as widely understood as it probably should be amongst consumers. And let's focus on North Carolina. That's where you're licensed. That's where you do business. Can you talk about some of the differences we see in the state of North Carolina with insurance? And not specific premiums and stuff like that, but you and I have had conversations about, once you start to get east towards the coast, how different that can be compared to a Greensboro, a Charlotte, those areas as well. Can you talk to those differences that we see in North Carolina?
Yeah, absolutely. So, let's just, painting a picture, I guess. A lot of insurers will shed that risk to a fair plan, for coastal properties. So, typically we call it Hurricane Alley or anywhere east of I-95. So let's just say, hey, I've got this, dream of buying a house at the beach, or hey, I'm relocating my family to the beach. What you would do is typically we would write a fire policy to cover the house for fire, any peril like a pipe burst or something like that. And then you have a separate policy for wind and hail because wind and hail losses are so prevalent down there with the abundance of hurricanes, the abundance of storms, the abundance of named storms as well. Your wind and hail policy would be separate of that. So, painting a terrible picture, I guess, if you have a house and it catches fire, if I have it insured, Farm Bureau covers, the fire loss. But if Hurricane Drew comes in and, blows the house down, then part of your fair plan separate policy for your wind and hail would cover those losses as well. So really good question, obviously, because a lot of people will ask, hey, why is wind and hail excluded on this policy? Why do I need a separate wind and hail policy? And it's basically because that risk is shed to, the North Carolina Fair Plan.
And just to clarify that for people that are listening, right? The North Carolina Fair Plan is a totally separate policy from what North Carolina Farm Bureau writes, correct?
That is correct. And a lot of times you'll see letterheads where, it's one policy in conjunction of each other. And then in the fine print, you might see, hey, the wind and hail policy or the wind and hail portion of this policy is covered under, the North Carolina Joint Underwriters and North Carolina Insurance Writers Association, which is basically the fair plan for that.
Gotcha. So that is a state-sponsored, state-specific policy. It's not something that someone goes out to another insurance provider and obtains. Is that correct?
Typically, yes. So, yeah, and a lot of the insurers that are located in North Carolina participate into that fair plan to get that risk into the fair plan and off of the financial books of, their insurance companies.
Cool. Another hot topic in insurance and home purchasing is roofs, right?
Mhm.
Can you speak to uh, perhaps age of the roof, condition of the roof, things you should be aware of when you're purchasing a home that could cause the insurability of it to be in jeopardy?
Yeah, absolutely. So, a lot of the insurance companies are going to, ask a roof questionnaire or send a third party inspector out to look at the roof and everything else. If you're a new home buyer or purchasing a new home and, it might be your third, fourth, fifth home, I always tell people it's always safe to get a roof inspection. Obviously, the home inspection that you're going to have will probably include the roof. But to go a little bit further in depth, you may want to hire a trusted roofer to go out and assess the roof before you purchase the home. Let's just say the roof has hail damage that, you're buying it as is, there's hail damage on that. A lot of times insurance companies will say, hey, we're going to cover the roof at an actual cash value cost versus replacement. We'll cover obviously anything else that happens, obviously, full replacement. But if there is a roof claim because we're insuring this roof in a poor condition, we're going to give you depreciated cost on the roof for the settlement versus replacement cost on the roof. So I would insure any new buyer or any person that's buying a house to just be thorough and get a trusted roofer out to get a roof inspection if you're unsure of the home inspection that you're getting on that house anyway. So really, really prudent idea to do that. And it's only going to save you heartache in the long run as well.
Is there a specific age of roof where your insurance companies have a cutoff where they won't insure it, or any details along those lines?
Not to muddy the water on that, but 20-25 years, obviously, most roofs now are a 30-year architectural shingle, and you've got metal roofs, you've got fortified roofs. There's a lot of options there with roofs, but when we see mismatched colored shingles or just maybe moss growing on the roof or something like that, that's always just kind of cause for concern for us. So that's kind of where that roofer, for a new purchase would be, hey, you've got this, you've got that. And it may be a seller concession as well that we need to get the roof done before we actually sell the house. So, just being prudent on that and kind of getting the most information prior to the purchase. That being the case, obviously you're doing your homework and it's going to save you, headache and heartache, in the long run.
Yeah, that makes a lot of sense. What about for existing homeowners? And you and I have had this conversation. I've had roofers come knock on my door and say, hey, we're offering a free inspection for the roof and we'll handle it with your insurance company. You're just going to pay your deductible and we'll handle everything else from there. What are some things to look out for if you're a current homeowner that we're all getting these door knocks and text all the time about roof inspections?
Sure. And, and the market for roofs have gotten so flooded with, people wanting the work and obviously, trying to provide for their families as well. I don't necessarily fault them for, the attempts on doing that. For one, I would say always lean on your agent. We've got trusted sources that we trust and people that do right by us and the insurance companies. We can usually provide somebody that we trust and know. A second notion of that is the guy comes knocking on your door and he says, hey, you've got this damage. We'll file it with your insurance and everything else. Well, the hard part there is he's not a named insured on that policy. So when he calls to file the claim, we can't file the claim based on him calling. We have to hear it from the homeowner. So a lot of times people will get these calls and will say, okay, this roofer came out, he saw damage on my roof, go through the whole, spiel of everything else. The insurance company, we're going to do our homework as well. We're going to send a non-biased third-party roof inspector out to make sure that the damage that on that roof is warranted for the replacement. So I've had a lot of people come to me and say, hey, I'm really unsure. This guy told me I have roof damage, but I don't know if I want to go with him, A. And B, do you have anybody that you recommend? And if I recommend somebody that I know and trust, obviously they'll come out, they do a good job, and they'll say, hey, you've got really nothing to worry about. There might be just slight damage, but nothing that's going to cause further loss at this time. So in that, lean on your agent for one. Two, do your homework. And three, just know that roofer obviously is in the business for roofing. He can't necessarily file the claim because we need to hear it from the named insured on the policy and not the roofer himself. But
Yeah.
again, if the damage is warranted, we stand behind that. At Farm Bureau, we do. So, we try to do our homework as well. But at the same time, we urge our homeowners and our clients to do their homework as well to make sure that the claim is worthy of filing.
Yeah. I know somebody who owns an insurance agency in the eastern part of the state, and I had a conversation with him really probably a year and a half ago, somewhere in there. He mentioned that he could see a world in the coming 5 to 10 years where insurance companies no longer cover roofs. Has there been any chatter about that, or is that just someone kind of predicting how they could see the industry changing in the coming years?
Yeah, I haven't heard any chatter on my end for that. Obviously, when we cover the house, that's from, the corners and up. We're concerned for the dwelling and any other structures on the property as well that, would be covered on that homeowner's policy. So, I haven't heard any chatter on my end about just, completely not covering roofs. However, roof claims are probably, I would say, over 50% of our homeowner claims are roof claims. And, we live in a climate and in a state that, not only do we get hurricanes, but we get ice storms, we get hailstorms, we get the whole gambit. That's the
Yeah.
beauty and the curse of living in North Carolina. It's a very diverse geographic state, but at the same time, there's a lot of what ifs. There's a lot of things that could or could not happen, obviously. But no, on my end, we have not heard any sort of chatter about just, if it's a brand new house, we wouldn't just completely sever that coverage, for roof claims as well. So
Sure.
a lot of times you might have a separate deductible for wind and hail, but at the same time, obviously that's still part of your homeowner policy. And, that's going to be covered, for covered perils.
Well, we're recording this on January 21st, probably come out in March sometime. So, we are on the edge of potentially getting the snow ice apocalypse this weekend. So you might have a very busy few weeks ahead of you here, potentially, Braden.
We're batting down the hatchets and we're getting ready. So we shall see. We've got 6 phone lines and I have seen it in the past where all 6 are glowing red.
There's people on hold.
Correct. Yeah. So, but that's that's the beauty of it. We're a very grassroots organization. We've got at least one office in every county. So we urge you call in. One thing about Farm Bureau, you won't see a 1-800 number. Call your local office, talk to somebody, and we'll get you taken care of.
Yeah, that's awesome to see, and honestly, kind of rare in the insurance world. I'm grateful for our partnerships. I'm grateful you're my agent. I call your cell phone if I ever have any questions, related to that, which is really helpful in today's day and world where you might be talking to an AI bot if you're calling a 1-800 number. So.
Sure.
If you're calling your insurance agent, it's usually not for a fun reason. So talking to a real human is a good thing.
Yeah. Call me and tell me hello sometime. Always nice to get those calls too.
So we've talked about the structure, right? What else should people be thinking about when they're putting together a homeowner's policy with you, right? Like, how do you deal with personal property, jewelry, things of that nature, and make sure people are thinking about that stuff as you're putting together a homeowner's insurance number for them?
Sure. So, one thing is age of the house. Age of the house is always dictated indicative of the premium. And a lot of people, certainly in affluent neighborhoods, where the house might have been built in the 1920s or 1930s, it's been completely remodeled, completely regutted. The plumbing's been updated, the electrical's been updated. The unfortunate part is we have to go off of that deed date. So when that house was built. However, there are certain things that we can do to put on the policy. Hey, the plumbing was updated, within the last 5 years, electrical updated in the last 10 years, et cetera, to offer coverage for that. Another thing too is, your newer houses built in the last 5 or 10 years. There's a pretty good price break in a newer house as well, knowing that the utilities and the trade aspect with your plumbing, your electrical, your HVAC, all of that's basically brand new because the house is brand new. So
Right.
looking at fire districts, I actually wrote one 6 months ago in the mountains where the fire district was, the nearest fire station was 7-8 miles away. And winding roads and everything else. So if the house caught fire, how long is it going to take for the fire truck to get there to put out the fire, to stop the loss and everything else? So that, the material of the house, it can dictate, if it's a frame house with siding, if it catches fire, it's more prone to catching fire, whereas a brick veneer house may not be. So, looking at certain aspects of that obviously kind of dictate, some of the specifics on, overall price. And I'm not saying they differ, tremendously, but, when you're close to close and everything else, it's certain dollar could make a big difference as well. So
Sure.
just looking at those things as well, kind of the overall picture of it can kind of clear things up for a potential buyer.
What about, how do you go about talking to your buyers about like their personal goods, right, within the house? Like, how do you start to have them start to think about assigning an estimated value there for that and for jewelry and, other things that they actually own that are going to be within the four walls of the home?
Sure. So your personal property, you're going to automatically get a big chunk of your personal property covered. So I've never come across where we have to increase that limit. A rule of thumb, or your typical policy, whatever your coverage A, that being your dwelling, your personal property is going to come with 70% of the dwelling value for personal property. So using round numbers, and I'm not one for math, let's just say you have $500,000 on your dwelling. If you times that by 0.7, you're going to have $350,000 worth of personal property. Now, the caveat to that is banknotes, money, jewelry, firearms. Those are going to be covered on a little bit lesser scale, but your furniture, your electronics, your silverware, your kitchenware, that kind of stuff. If something happened to that, let's just say in a fire, you're going to have $350,000 worth of personal property coverage to be replaced inside of that house. And again, I look at a lot of people and they'll say, I don't need that much coverage. You're going to get it anyway. So
Yeah.
that's kind of the benefit. But anybody with armory of firearms, or a bunch of jewelry, it's helpful for the agent to know that up front. That way we can kind of guide you and advise you on how to insure those, whether it be on the homeowner policy or a separate policy that stands alone. And I've got certain reasons why I do things. I prefer jewelry and firearms on a separate policy. It's just a little bit cleaner. And if you move and we forget to schedule it on the new policy, obviously you've got the standalone policy there that we just need to update the address on. So
Continues to cover. Great. Talk a little bit about bundling and how that helps people with their insurance, and why that's a good idea to kind of have home and auto all in one place.
yeah, so bundling and we call it supporting coverage discounts. So let's just say, hey, I need this homeowner quote. We're closing in 45 days. It may behoove the purchaser to go ahead and go through the underwriting to get an auto quote. Lots of times we can either A, save you money on your auto, in general, and then B, obviously, if we're tight to close or whatever, on the mortgage side, the purchase side, having that auto policy come in to support the coverage of the property and the homeowner policy, it's going to just lower the cost of that homeowner policy as well. So let's just say if it's $200 a year that we're tight on, and the auto is still the same price, well, then all of a sudden you're saving $200 on the homeowners to give you the thumbs up to close on the property.
Yeah.
So
The
and then
additional discounts come in, and they typically are meaningful, right? It's not something that's $50 a year or something that we're seeing.
absolutely. And it all differs. I mean, everything is subjective versus objective, but going through the underwriting and going ahead and getting an auto quote just to see where you're at and seeing what that difference is on the homeowners, to just play with the numbers. It definitely benefits the buyer as well, just to kind of see where things are at, and save them some money on the front end as well, and obviously help their insurance costs for the purchase.
Yeah. So without going into specific numbers here, when people come to us and they want to know their interest rate, right? Well, there's so many different things that go into it, right? How much are we putting down? What's your credit score? Where's property located? Debt to income ratio. All these different things go into it for us. What are some things that people should be aware of, when they're getting a homeowner's insurance quote or an auto insurance quote or whatever, in terms of how the insurance company starts to account for risk. Is it credit scores? Is it location? Go into that a little bit.
Yeah, so it's a slew of things. Credit score definitely, has a big factor in that. Credit score, claims history. If I'm running somebody's claims report and we see, three huge water claims, it might not be a risk that we want to take on. And I know insurance is obviously there for the big what if, but at the same time, we have to only go off of what we can do at that moment in time. So, looking at that, obviously, claims history, even liability claims. I've had a client who had a dog incident, and obviously the liability claim kind of played into that. So, not to speak really into specifics, but claims history, credit score, having the supporting coverage, all of that, comes into a factor, obviously. And the earlier that you do it, obviously it benefits the buyer as well, just kind of getting a picture on that, rather than wait until, 3 days before you close to kind of go through that underwriting process.
Yeah.
The earlier, the better. And that way we can kind of do our homework while the buyer's doing their homework as well.
So you mentioned the early aspect of that, and that's one of the things we're so grateful that when we work with you, we get the insurance back very early, as opposed to these kind of bigger companies that are the 1-800 numbers. A lot of times, it's the last thing we're waiting on,
Sure.
to submit to underwriting for final approval. For buyers that are out in the market right now, is there a way to get a quote on a house that you're not under contract on, or how does that work?
Absolutely. I've got a client right now who's shopping houses, doesn't know if he wants to move, but has it, kind of in his idea, hey, this might be a 6-month thing, this might be a 12-month thing, this might be an 18-month thing. So, I encourage him. I say, hey, just send me the address, send, what you might think that you might buy it for. Let me run a replacement cost estimate, and I call them an RCE. The real estate value on a house might be, completely different than what the replacement cost of the house is. The size of the parcel, the size of the land that you're buying. If it's a modest 3-bed, 2-bath house on 4 acres of land, you're also buying that land as well. So,
Right.
If you're buying that land and the house for, $800,000, but the house itself, to replace it, is going to be 4, we don't need to insure that house for 800,000. You're only paying for stuff that you don't need as well. Plus, you want your insurance value, or you want your insurance value to be as correct as possible or as accurate as possible. And I tell all my clients, I said, you want your real estate value to be as high as possible. You want your tax value to be as low as possible, and you want your insurance value to be as accurate as possible. That way you're not underinsured or overpaying for something that you ultimately don't need. So,
Yeah. Well, let's talk about that some, right? So a lot of people, insurance is one of these things that's out of sight, out of mind. I'm paying it my mortgage payment every month. The mortgage company's paying it when the bill comes due. A lot of people, frankly, probably haven't looked at it in 5 or 6 years. So in Charlotte and greater Charlotte area, North Carolina in general, there has been massive home appreciation that has happened since 2019 to now early 2026. What would be your advice for people in terms of talking to them about their current insurance policy, and then really honing in on your replacement cost estimator? You're totally underinsured now because your home value is so much higher.
right. And that's a really good question, really good aspect to the policy itself. So, with our policies, our coverage A amount is actually going to increase a little year over year over year by a percentage. So, looking at the math on that, and I do the same thing for my parents, and I do the same thing for several of my clients. 4% of a million is a whole lot greater than 4% of 400,000, right? So, however your coverage A is appreciating year over year to reflect appreciating real estate cost. Again, when it gets to a certain point, that percentage just kicks it way up. So whether we need to review it to make it come back down and alleviate some of those premiums, or let's just say you're in a neighborhood that's just exploded over the last 6 or 7 years, you might want to just take a look at your homeowner policy, call your agent and say, hey, can you run a replacement cost estimate for me and just see how close or how far off we are on this, and make those adjustments as need be. The worst thing in the world is having somebody that's underinsured. All of a sudden they have a claim that was unforeseen, and all claims are unforeseen. No one wakes up and says, I might have a fire today, so it's really, really prudent on the individual and on the insured that They review it. I'm not saying every year, but every other year is a good rule of thumb to just say, hey, where are we at? Call your agent, have them do the work, have them do the RCE for you. And then once that number comes out, if it's accurate, great. If it's not, make those changes.
Is that number 4% pretty standard in terms of what you've seen, or is that just a number you were just using there?
Just a number that I was throwing out. I believe ours is 8%.
Okay.
And again, just kind of throwing 4% out there just to, whatever, but
Sure.
8% on ours. And like I said, I actually did it for my parents a couple weeks ago. They got their renewal in the mail and they said, hey, again, it just jumps up here. We don't think it needs to be this. We think we're overpaying for certain things. I run the replacement cost estimate. It's about $75,000 too high on the percentage jump. So, run the replacement cost estimate, and then make the said changes on that to alleviate some of those premium dollars. So,
as someone who's done a mortgage for their parents, that your parents are your toughest clients for sure. So,
yeah. It's not always rainbows and butterflies working with family, but we love them anyway.
So, as we start to talk about actually getting into the home, right? What are some mistakes that you see people not thinking about? Whether that is, hey, should I be, now that I'm a homeowner, should I be thinking about life insurance? Should I? What are some other things that you do with your clients after they actually buy the home to kind of help protect them and their family into the future?
Yeah, and I'll speak on that, on a couple different items. You mentioned the life insurance, and I'll kind of come back to that. But at Farm Bureau, every 5 years, we do what we call a homeowner update or a homeowner rewrite. Basically, it's a forced touch point between the agent and the client to say, hey, here's where we're at now. Have you done any updates? Have you built a new deck? Obviously, if you've gone from wood decking to Trex or, composite, that might be something. My wife and I, we just got done doing a bathroom. So obviously, all the money that we sunk into a bathroom that once had linoleum flooring and old, pink countertops now has, granite countertops, tile flooring, tile shower, everything else. So, running those numbers on that, obviously, hey, we might need to up our homeowners coverage, $15,000-$20,000 to make sure that if something does happen to the whole scheme of the thing, we're covered. It might be just in the bathroom, it may be the whole house, but every 5 years, we're going to do that homeowner update and homeowner rewrite to make sure that the client's taken care of. We do an updated RCE every 5 years anyway. So we have that aspect, obviously, to make sure our clients are not underinsured, but obviously not overinsured as well.
Real quick, before you move off of that, let me ask you one question in relation to that.
Sure.
If someone is doing a renovation, right, they're mid redoing a kitchen, a bathroom, whatever, should they be doing anything in regards to their homeowners insurance policy while renovations are going on?
You can. I always tell my clients if there is a renovation going on, it's not necessarily a builder's risk because you're already in the house if the house is, livable. Now, if it's a full gut, obviously you might want to let us know before the project starts. But after the project's done, hey, we did this, we did a kitchen, we did a bath, and we had $100,000 of upgrades done to the house. We need to know about that. If there ever is something that happens, obviously, you might be significantly uninsured on that. So, notifying the insurance company, notifying your agent ahead of time obviously helps us out. And I'll go back to doing your homework early. But at the same time, let's just say you forget to do that after the project is complete and we've, spent $125,000 on this project. We definitely need to know about that. That is just helping you out. In the grand scheme of things, but also it helps us out. That way, if something does happen and we're not notified of it, we're only going to pay out this much because that's what the policy dictates. So, very, very good question on that. But like I said, always err on the side of caution, always let us know ahead of time. That just kind of lets us get out ahead of the curve and, helps us do our homework as well. So
cool. Thank you for clarifying that. So, looping back in terms of what are some other things you can help clients with post closing on their home, right?
Yep. So we always say, hey, we've got the home, we've got the auto, we've got the golden eggs. Why aren't we protecting the golden goose? Obviously, you've got a mortgage on the house. Typically there's a family involved, whether there's kids or a spouse or something like that. So typically what I do is I'll go in and I'll do the homeowner's appointment with them, and I'll say, hey, now that there's a mortgage on the house, outside of work, is there anything to protect the mortgage? And obviously, that being the form of life insurance. If you can qualify for life insurance, it's always something safe to have outside of work. And a lot of people, rely on their work sponsored life insurance to, cover whatever it is, whether that be 1 year, 2 year salary. A lot of times your mortgage and what you owe on the house is greater than what that would be. And I'll even give you this. Let's just say you decide to quit your job and start that dream business that you always wanted to do. Well, now all of a sudden, hey, there's a need for these benefits to cover me on this. So it definitely benefits the client to look into something outside of work, because your benefit package could change. You could, start that dream business that you ever want to do, or, in the unfortunate scene, get sick and not be able to work. So all of a sudden, then you probably wouldn't qualify for life insurance. So it's definitely a product that you got to get when you don't need. But at the same time, it's definitely prudent to the buyer to have something outside of work to not only to cover the mortgage, but any sort of other financial vulnerabilities as well.
Yeah, and look, grief's a terrible thing, right? And when if God forbid something were to happen to you or a spouse, and the income source for the family evaporates, it's so important to allow someone to grieve a passing without the financial stress of, oh my gosh, my spouse passed away and now the bank's going to take my house because I don't have a way to pay for it. So it's definitely something we recommend as people get into it. Obviously, the younger, the healthier, the better and cheaper it is for you. But I mean, if anyone, especially if you've got a spouse and a family, it's something you should definitely be looking into to provide protection for them. God forbid anything bad happens.
And we believe that wholeheartedly, and it's one of those things too, where, the worst thing in the world is to see a client have to grieve and not have the funds to make that mortgage payment, or make, the grocery bill or whatever, because somebody went to work and didn't come home that day. So we stress that to our clients to say, hey, and whether you do have a current life insurance plan, that might be a really good time to review that life insurance plan, because, hey, I might have a 20-year term. I'm on year 18 of it. All of a sudden I bought this new house and I've only got 2 years of this coverage left. It might be time to review that and look into extending that runway of term, or look into other options to make sure that that person's covered on the back end in case something tragic does happen.
I think that's great insight. Let's pivot a little bit here. There are a lot of people that have become the term accidental landlords due to the fact that they bought a house during COVID. They had an extremely low rate on it. Life went on. They bought their next house, but man, the cash flow was so good by renting out that current property that they can bring themselves to part with it. I don't fault them. I'm one of them. What do you see differently from a primary residence policy to something that becomes an investment property when it comes to insurance?
So on your investment properties, typically I'll write a landlord policy or a traditional dwelling policy. So again, same thing, age of the house, updates to the house, plumbing, electrical, HVAC, roof, all that stuff. All are going to be questions that they ask, at the application. The only thing that really doesn't come with a landlord policy is your personal liability. And if you have a homeowner's policy, depending on who the carrier is to that homeowner policy, you can endorse that to extend your liability to that certain location. Now, let's just say your house is in your personal name, and let's just say your 3 investment properties are in an LLC. In that case, I would urge any client to take out a general liability policy and schedule those locations on the general liability policy. And they're not very expensive. But at the same time, if something happens and there's a lawsuit that's brought against you personally or your LLC, it's always nice to have that general liability policy to combat that or complement, obviously, any sort of liability losses in that. So, it's again, the non-homeowner occupied homes, you're going to write on a dwelling policy versus your homeowner policy is going to come more full encompassed with certain aspects to it. And then obviously you can endorse the liability and certain other coverages back to those other locations.
What about a vacation home, right? Not necessarily something that you're renting out as an investment, but say you've got the house at the beach, right?
Sure.
Any major differences there if it's just like a true second home vacation property, or does that get treated as a normal kind of primary residence insurance
It can go
policy?
it can go both ways. If there is a question on our application, is this a seasonal dwelling? So, if it's seasonal and let's just say, hey, the wife wants to go down for, 4 days a week while I'm, stuck in the office working, that's perfectly fine. The occupancy and how often the homeowner is there kind of dictates where we need to go with it. So, I mean, if the home is being occupied, on a regular basis, that's one thing. If it's being short-term rented or rented out to friends and family and everything else, again, you can still get away with the dwelling policy itself, extend the liability over to that house. But again, for us on the underwriting standpoint, if the house is insured and it's not being occupied, what happens if there's a fire? Well, then no one's there to report it, or hopefully a neighbor's there to report it. So, what we're looking at basically is how often somebody is there. And obviously, if it's the homeowner that owns it, hey, the spouse is down at the beach for 4 days a week, and I'm you meeting her on the weekends or what have you. The occupancy is there enough to where we would say, okay, if something did happen, we're gonna find out that the loss happened. Whereas if we're not there for 3 or 4 months, then we get in and all of a sudden we've got a huge mess on our hands. So
Right.
a lot of the exposure, obviously, to how much the homeowner's there at the house kind of dictates a lot of that as well.
Cool. That's really good and really insightful for people that are either having investment properties, thinking about investment properties, or vacation homes. Another popular term in the insurance world is umbrella policy.
Mhm.
Talk to what that is, why, when someone should think about having it, and why that would be an important coverage to have too.
Sure. So an umbrella policy is just basically excess liability on top of your underlying limits. So basically, you've got your home, you've got your auto, and then your umbrellas over top of it. I actually had a client several years ago. She thought an umbrella policy was flood insurance, and I was like, not really the case. And she was, relating umbrella was, hey, protecting us from flood and everything else. There was a water and a water shield aspect to it. That is not the case. An umbrella policy basically states that if I'm in a car accident and I'm found at fault and there's, X number of dollars to be spent on this person's bodily injury, medical bills and everything else, if my auto policy limits do not match or meet whatever that bill is for that person's medical attention, the umbrella policy is going to kick in for extra funds to that. So anything that I would be liable for, similar to the homeowner policy. So if somebody gets hurt on my property and there is a lawsuit brought against me, and all of the dollars on my personal liability on my homeowner's policy are spent, the umbrella then would kick in to give extra funds to that. I tell a lot of people, and as a licensed insurance agent, I think they're great. But when you've got a 16-year-old driver, that's probably a really good opportunity to look into an umbrella. Anybody with a swimming pool, you bring in a lot of risk, obviously, there if you have friends over and something happens or, what have you in a swimming pool. So a lot of that obviously is indicators on, hey, you might want to look into this, you might want to look into that. But the two biggest things that I use are, 16-year-olds driving around with everything that you've worked for in the trunk of their car.
Yeah.
That's the analogy that I use. And then on top of that, the swimming pool aspect, let's just say friends are over and something tragic happens, then all of a sudden, hey, that extra $1 or $2 million of coverage basically just, sheds that risk back to the insurance company.
So those are two great examples. Is there anything like as people's net worth rises, right? Say somebody's worth 1 million, 2 million, 3 million, and they don't have the swimming pool, they don't have the 16-year-old driver. Are those also things that are worth paying attention to for an umbrella policy as your family's net worth grows?
100%. And you don't have to be a high net worth individual to have one. It's
Okay.
basically just, protecting yourself for any sort of liability loss that may arise on to your fault, right? So, hey, I'm going down the road and there's a family of, 4 that, pulls out in front of me. And no matter how that works or whatever, if I'm found liable for that, that umbrella coverage, whether I'm worth $30,000 or $30 million, obviously is there to protect me for any sort of losses that arise out of that incident.
Cool. When you write the umbrella policy, is there anything specific that the client has to do, or you just write the umbrella policy and then everything under that is covered?
The only thing that we would look for at Farm Bureau is minimum liability limit. So, we would not write an umbrella policy if your auto policy had state minimum liability limits, and then obviously the homeowner's policy, if you had the minimum limits on it, basically you're just adding more coverage to what we would eventually offer anyway. So that being the case, we definitely want to see a certain level of liability limits on your auto policy, and then the homeowners too. Every homeowner policy that I write is going to be more than the minimum liability. So I don't really necessarily worry about it so much with my clients on the homeowner side, but if we did want to qualify for an umbrella policy, we do have to have certain liability limits met to qualify for an umbrella.
Is there anything that says, okay, so I have my insurance with you, right?
Right.
And not that I would do this, but if could I go to another insurance company and get an umbrella policy to cover me additionally, or do you need to have all of those policies in one place?
No, you don't need to have those in one place. There may be a surcharge if you don't have those policies under the certain umbrella. I do know that a lot of companies will say, hey, where's your auto, where's your home insured and everything else. And if that's split and we're doing the umbrella, there may be a small surcharge there with the policy, not having those underlying coverages with that same carrier.
Got it. That makes sense. All right, so let's talk a little bit more. Let's play out the bad scenario. We got to file a claim. My house caught on fire yesterday. What does the claims policy, or what does the claims process look like? From the time a client calls to the time they're, receiving their check for the damages. How does that work?
Yeah, and again, I'm not an adjuster. I don't,
Sure.
claim to be one. I don't have an adjuster's license, but
Just the
I do.
general time frame on kind
Yeah,
of how that
yeah.
works. Yep.
So at Farm Bureau, obviously call your agent, call the local office, and then obviously on our mobile app, you can file a claim through the mobile app as well. But let's just say we get a call first thing in the morning, said, hey, over the weekend, I put water in a frying pan with a bunch of oil and had a kitchen fire. Okay, stop what you're doing. Obviously, is the loss still happening? Obviously not. The fire department came and everything else. We're going to file the claim, and our adjusters are going to be in contact you within 24 to 48 hours. Obviously, some hot item tickets warrant quicker responses, but at the same time, if there is a fire, be on the lookout for a phone number that you don't know or have programmed in your phone, and the adjuster is going to make an appointment with you ASAP to go out and assess that damage and get the ball rolling. The adjuster is going to come out and look at all the damage that occurred and start the estimate process as well. It's up to the homeowner or using our recommendations to go ahead and call a restoration company, and we'll work directly with the homeowner and we'll work directly with that restoration company in conjunction with getting them back obviously indemnified and getting their kitchen put back together as fast as possible. Similar to an auto, let's just say somebody had somebody back into them or rear-ended somebody. Go ahead and get the estimate. The first thing the adjuster is going to ask is, have you gotten an estimate? So go ahead and get that estimate process rolling. That way, when the adjuster calls, you can give them the estimate. They know the body shop that you're looking at taking it to. And then all of a sudden, we can get the ball rolling as quickly as possible on that. So we've got a great team of adjusters here. We were actually ranked number one by Forbes for the number one auto insurer in the nation, number one by Forbes and number one by Crash Network. We were also number four homeowner insurer in the nation as well, and I think number one in North Carolina. So that's a testament to our adjusters. We've got a great agent team as well at Farm Bureau, but our adjusters are top notch, and we stand by that.
Awesome. That's fantastic. I mean, obviously, when those things occur, people's lives get completely interrupted. So again, going back to being able to call a person on that and have such a quick response time to start putting your life together is great.
I'll give you a testimony. And I remember it like it was yesterday. I had just gotten back from my honeymoon a couple years ago. My wife flew out. I think she was in Oklahoma for work, that day. And all of a sudden, I'm riding home from work and tornado comes through in between Gaston County into Mecklenburg County. And I remember trees were down and everything else. So I come in the next day and I get this call from this guy. I had no idea who he was. And he calls and he says, hey, I'm so-and-so's neighbor. And I said, okay, how can I help you? He says, well, they're in Italy and a tree fell into their house. And I said, well, let me stop what I'm doing. I'll meet you on site here in 30 minutes to an hour if you're available to meet. And the tree had basically had cut the house in half. So Italy, they don't have cell service, or the cell service that they have is obviously there's a time difference involved. So via email, via text messages and everything else, we finally got in touch with them. I showed them pictures and everything. They were devastated. I said, hey, I've got a restoration company that I can recommend to you guys. If you're okay with it, I'll have them go out, tarp the house up, stop the loss. Rain might come into it, total mess. They were in Italy for a month, and I think this was day 6 that they were in Italy. So they had three more weeks of vacation left. They sent the work order to them via email, got the work order going ahead. Our adjuster was on site as well to kind of go through everything. And by the time that they got home, they had maybe 1 or 2 more weeks of work left. So by the time they got home, the majority of the work was already completed. So,
that's a great story. It's a sad story. A sad story, but a great story, right?
Yeah, we made the best out of a very, very bad situation. So, and that's just part of, being able to call somebody and not having some third party person that you don't know come out to your house. So, we're proud of that, and obviously proud to share that story and get the person taken care of as well.
Awesome. Having great neighbors helps too.
Yes, absolutely.
Cool, man. Is there anything else about insurance that you think people could benefit from learning today?
I would say do your homework, stay on top of your policies, just review everything. As life changes, people just don't think about insurance, and I don't blame them. It's boring. I say that tongue in cheek. I do it every day. It's fascinating, but at the same time, I tell people when I hand them their policy, I said, it's as good as Ambien. Flip to page 1 and you can't sleep. By the time you get to page 3, you're probably going to be dozing off. So,
yeah.
But stay on top of your policies. Life changes, whether you have a children or get married, or if you're widowed, even all of the stuff that life throws at you. Insurance is there, linked to whatever life event that you're having. So I would tell people, just review your policy, have somebody review it with you. As life changes or life events happen, think insurance. It doesn't have to be the first thing you think of, but think insurance is, again, at Farm Bureau, we predicate ourselves on annual insurance reviews. So
yeah,
we always offer that to our clients. Make sure your liability limits, your property coverage is, your auto, everything, it's full scope. Just, stay on top of it. But the big kicker obviously is just any sort of life change, come in, review it, make changes, obviously, and make sure that you're covered, obviously, because again, it's better to have it, not need it, than need it, not have it.
Awesome. Well, Brayden, this has been really insightful, and hopefully people have a lot of great takeaways from it surrounding insurance as they're thinking about a home purchase, or as their life is changing and they're getting ready to sell a house, an existing homeowner, turn it into investment property, whatever. So very insightful. Let's have a couple fun questions before we get out of here. You and your lovely wife, Tracy, get a night off from the kid. Where are you guys going to dinner in Charlotte?
Ooh, I'll give you 3. I'll give you one in Charlotte, 2 outside of Charlotte.
All right.
I'm a big fan of the Palm.
Yeah.
I do like the Palm restaurant. There's a place in Denver called Chillfire. That's really good. And you and I were here recently in Gastonia called Webb's Custom Kitchen. I don't think you can go wrong with either one.
That was my first time to Webb's Custom Kitchen. I will be back. That is a really, really cool place. All right. I know this about you. Not everybody knows this about you. So outside of doing insurance, being a dad, being a great husband, big golfer. So how do you relate golf to life and work and all that good stuff?
As I age, if you asked me that 5-10 years ago, I would say, be as competitive as possible and just, grind. As I'm older now, just enjoy being out there. Life is too short, but life is also too long to not enjoy, the subtleties and what it brings. So, new golf course, no matter what I'm shooting these days, enjoy the scenery, enjoy the company that you're with. Take it all in. In this business, you see a lot of lives turned upside down. You see a lot of loss, but at the same time, you can kind of hang your hat on helping people as well. So, I get pleasure out of that, and just, enjoying the small things, just being grateful and giving thanks. I'm a Christian. So, pray every day and give, give glory to God as well. So just, being thankful for the blessings that life has, and just kind of going through that, and just, not taking it too serious, but doing a good job, obviously, on the insurance side, but just being grateful,
Yeah.
enjoying life for what it throws at you.
Well, that's great advice for anybody about anything in life. I'll leave everybody with one of my favorite stories regarding you on the golf course. That is PG and appropriate for everyone here. But hey, listen, and I'll tell everybody, if your insurance agent is good at golf, they're good at insurance. And here's a story to back that up. So Brayden came up and played with me, my father-in-law, and another gentleman up here. And Brayden made a putt on 8 to go 3 under through 8 holes. And one of the guys we were playing with was a very good player, still is, but was very good when he was our age. And played in some good mid-am stuff across the Carolinas. And looked at Brayden and said, "Darn, man, what do you do for a living? Insurance?" And Brayden said, "Actually, yes, I do." And he goes, "I've been losing to y'all my whole life." So we'll leave everybody with that. Brayden, it's been a pleasure. If people want to get in touch with you, what's the best way for them to contact you?
Yeah, so my office number is 704-867-5433. Email address, obviously, Brayden can be spelled a slew of different ways. Brayden.Hawkins at NCFBINS. That's BRAYDEN.Hawkins at NCFBINS.com. And give me a call, shoot me an email, whatever you need. Obviously, I'm here for you. And I'll leave you with one as well. I've got a story about you. We were playing a match on the golf course, and you had hit one out of bounds. And I think I was giving you a shot as well. So you
Most
re-tee
likely.
it. You re-tee it, you hit it in the woods as well, and I'm by the green thinking I'm about to go 1 up or 2 up, or maybe even get back from 1 down or something like that. And I'm looking at this ball come out of the trees, rolls right up on the green. It's perfect speed, heading right towards the hole, and all of a sudden my blood pressure rises just a little bit, and I see the ball disappear, and I'm like, that son of a gun! I'll never forget that as long as I live. So
That's an all-time 4-3 with a shot right there.
that was the ultimate 4-3, and I think I even had a birdie putt too, and I was so shaken up that I didn't even hit the hole or didn't even come close. So, if we're swapping golf stories, I'll give you the compliment on that as well. So, yeah.
All right. If anyone needs any partners in a Scrabble team, we're available. So,
Absolutely.
all right, Brayden, been a pleasure, man. Thank you.
Absolutely. Thanks for having me on, and give me a call, shoot me an email if I can help you out. Been a pleasure.
Good.